The Federal Reserve, unsurprisingly, holding rates steady as inflation progress seems to slow. Fed Chair Jay Powell saying that there's still a lot of uncertainty around the impact of President Donald Trump's policies.
The committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be.
Joining us now is Matthew Luzetti, who is the chief U.S. economist at Deutsche Bank. And it certainly sounds like the FOMC is waiting to see how inflationary those policies might be in one direction or the other. What's your best assessment at this juncture?
Yeah, yesterday I think markets were looking to get any signals about when they could cut rates again. There was an explicit question about whether or not they could cut rates at the March meeting. I think Powell did not completely take it off the table, but his overall framing of the economy, strong growth, solid labor market, inflation progress which has slowed, plus the uncertainties about the Trump administration's policies, tells them that they don't need to be in a hurry. They're in waiting mode. I think as you look at the timeline for those policies, there's an April 1st deadline to get a lot of details around potential tariff policies. That makes a March rate cut unlikely, and then it opens up questions about how inflation evolves after that April deadline.
What about the drop that we saw in GDP this morning? The headline number may be spooking investors just a bit, but once you look underneath the hood, there's a lot to still be encouraged about. Absolutely.
The guts of the report were actually very strong. So if you look at consumer spending, it was up 4.2% annualized in Q4, much stronger than anticipated. I think we're seeing some volatility in some of the other components. The trade data in particular was very volatile in Q4. We saw the widest trade goods balance deficit in a while, given data yesterday. And so I do think there's probably also some tariff effects or anticipation of tariffs that is creating volatility in some of those data points. But there was nothing to worry about in the GDP data this morning. 4.2% consumer spending, private domestic demand growth above 3%.
Yeah, still growth, but not at the same pace that we had seen this time, comparable quarter last year, and even sequentially a little bit of a pullback as well. What does that spell out to you then about the trajectory for continued GDP growth, especially as these policies are ingested by the economy?
We're constructive on growth. We expect that the economy grows 2.5% this year. That's above consensus. It's above what the Fed anticipates. But it's mostly just a continuation of what we've seen over the past year. The economy grew essentially 2.5% in 2024, so we expect that to continue. Now, obviously, there's a lot of moving pieces and a lot of uncertainty around that. We expect that we do get a tax bill around the middle of the year that does have some tax cuts involved in it, an expansion of the child tax credit, some business tax cuts as well. But we are also expecting tariffs to be put in place. We expect a ratcheting up in tariffs on China, a ratcheting up in tariffs on Europe as well. All that will help to dent growth. Now, there's some downside risks to that, no doubt. This weekend, we could get tariffs on Canada and Mexico that are 25%. Mm-hmm. We could get an across-the-board tariff that has been talked about by the Trump administration as well. Those are not in our forecast as of yet, but that would tend to dent growth, but also lift inflationary pressures this year.
Yeah, Matt, and you were nice enough to send over a chart that we used as part of our chart book. Josh used it as part of the chart book, and it was very much about tariffs and the risk that potentially this poses to inflation. If we were to get that 25% threat on tariffs on Mexico and Canada here this weekend, and then factoring in the potential here for China, what does that upside risk to inflation look like?
Yeah, I think the chart there is exactly why the Fed has uncertainty right now, mm-hmm. and is in a wait and see mode. So we factor in the tariffs that I just mentioned on China and Europe, and we expect core PCE inflation to be 2.5% this year, essentially in line with what the Fed outlined in December. But if you factor in 25% tariffs on Mexico and Canada, it is very easy to get to 3% plus core PCE inflation forecast this year. An acceleration in inflation, not a deceleration. And so that chart, I think it really epitomizes why Chair Powell says the Fed isn't in a hurry and they want to see how these policies play out.
We only got 15 seconds. Cuts this year, what's your anticipation? And what is the probability that you're looking at of a potential hike?
So we have no cuts this year. We do think that the next move is a cut, but we think it doesn't come until 2026. I think the bar to hike is high. I think it'd be disruptive to markets. But given the wide uncertainty bands around policy, we can't completely rule it out. If inflation does accelerate, as that chart certainly indicated, and inflation expectations pick up, that could be part of the conversation later this year.
What's that threshold?
I think you need 3% and above inflation, and you need the labor market to be strong and tighten. Because as long as the labor market is weak, the Fed's not going to be hiking rates.
All right, Matt Luzetti, always great to get your insight. Thanks so much for taking the time to join us here today.
Thank you.